Are you trying to decide if you should save 20% to buy a home or just buy one right now with a smaller down payment? If so, I'm going to go through the pros and cons of each so you can decide. Hi, I'm McClellan with Colorado team, and I just want to talk with you today about down payments. A common theory with putting money down to buy a home is that you need to have 20%. And the logic behind that is if you put less than 20% down on a home, you pay what's called mortgage insurance, which is just an extra fee you pay every month with your payment. A lot of people think, why would I pay an extra fee every month? I'll just wait until I have 20% down, and then that way I'm not throwing any money away. And I see the logic behind it, but there's still more to the decision than that. Let's think about it this way. If you're saving right now to put money down to buy a home, and let's say you're saving an extra $1,000 per month to buy a home at $500,000. If we fast forward a year from now, you're gonna have $12,000 saved up. However, over the last year in Colorado, homes have been appreciating by about 1% each month. So that home that was $500,000 last year, now it's $560,000. That means that your down payment for 20% down went from $100,000 to $112,000, which means that the $12,000 you saved up last year just got wiped out. It didn't get you any closer to buying that home, and now the home's more expensive. And the reason I point this out is that you have to realize that when you're saving for 20% down, you're saving for 20% of the purchase price that's actually increasing over time. And right now, it's increasing at about 1% a month. So the goal is actually getting further away for you. Now, let's look at the flip side. What if, instead of saving, you were able to buy that same home right now and put 3.5% down or 5% down or 10% down, just a lower amount. But we'll say 3.5% down, you just put down $17,500 today. Now let's fast forward that same year. So now you've got $60,000 worth of equity that got built up without you having to invest any money out of pocket. Plus you put in $17,500. So now you're up to $77,000 worth of equity just after 1 year. Now, the other thing to think about too is once you have 20% equity in the house, you can actually get rid of your mortgage insurance. So let the property do the appreciation and do the work for you. I can tell you that I have clients that have bought a home with a 3.5% down FHA loan. They've owned it for about 3 years and just refinanced it. Now, they have no mortgage insurance and they have a home with over $100,000 in equity, all from a 3.5% down FHA loan. So when you're thinking about whether it makes more sense to save or pull the trigger right now, why don't we go ahead and talk? We can weigh the pros and cons together and see what makes the most sense for you. Comment below, shoot me a DM, or give me a call or a text at the number below. I'm McClellan at Colorado team. Thanks for your time.